All right, welcome everyone. Today we're going to talk about how to be a successful loan agent. That's the topic for today. And one way to put this in perspective is to just go through what are we talking about? What are the terms that we're going to be using? Well, who are the people that are involved? And the steps in processing a loan begin with a loan application being received. That's the step we're going to be focusing on. That person who does that is called a mortgage loan originator, called a loan agent. There's a bunch of different names, but that's the role we're talking about. Then there's a processor who collects information, an underwriter who evaluates the information. Then there's oftentimes a review of some sort. And finally, it's funded, which means the loan is actually made. So in the who's who, I've highlighted a few of the words that I think really define the role. The loan originator is a sales role. Now, in other words, the job of the loan originator is to answer people's questions, discuss the different loan products, and essentially sell them on using that particular lender. What the processor does is they organize, they collect documents, they put them together in a file. And then the underwriter is the one who evaluates that file and makes a decision as to whether or not they're going to proceed with the loan. How much does a mortgage loan originator make? Well, according to a survey done by Indeed, the average base salary for a mortgage loan originator is $155,000. In addition, they have the opportunity to earn more money through other types of commission. Now, this can vary a lot depending upon the type of employer you work for, which we're going to go into, but that gives you an idea of what loan agents can make, and I know some that make a lot more. How much does a loan processor make? Because some people think, well, I don't want to do the sales, I like the paperwork part. $51,000. How much does the underwriter make? That's a little bit of a higher level, $88,000, but notice that's about half of what the loan originator makes. So how are loan agents paid? Now, there are different models which we're going to talk about, but the one that I'm more focused on is the commission-only model, right? I'll talk about what the different options are. And let's use a median home price of $500,000. Now, if you're where I am in Silicon Valley, you would want to double or triple that amount, but that gives you sort of a guideline as to what kinds and how commissions for loan agents are calculated. Now, if you're in the real estate business, your commission is based upon the sales price. If you're in the loan business, your commission is not based upon the sales price, it's based upon the loan amount. So somebody buys a $500,000 house, they have 20% down, that's $100,000 down, they need a $400,000 loan. Now, the amount that the agent receives can vary, but as a starting level, and by the way, that means, yes, it can go up. Let's say it's 1.25% of the loan amount. That would mean $5,000. So if you were only doing a loan a month, right, you could make $60,000 under that model. 2 loans a month, you're making $120,000 under that model. And if you're serious about this and you're doing 10 loans a month, that's $600,000 a year. I know agents who do 30 loans or more a month. They have a team, they have help. I'm just saying. So who would you work for if you were a mortgage loan originator, a loan agent? There are online lenders, right? Banks and credit unions are a brick and mortar lender, and then there are mortgage companies of various kinds. So the online lenders, that would be somebody like Quicken Loans, Rocket Mortgage, somebody like that, Lending Tree. There's very little lead generation that you need to do. And whenever we use the term lead generation, we're talking about the sales function of being a mortgage loan originator. You're not having to call people, you're not having to market yourself. It's basically an order taker position. So people fill out forms, you get a copy of the form, you call them back, you talk to them, sometimes they call, it's forwarded to you. Now, that's the plus side. The downside is you only have the loans that that particular company has to offer. and the pay is usually a lot less. It's a base salary plus commission, but that would be on the lower end of the scale. But then again, you don't have to do anything for lead generation. Banks and credit unions, old-fashioned brick and mortar, there's less lead generation. But in other words, if I'm a loan agent at Bank of America, it's possible for me to just sort of sit there. This is assuming that people are walking into the bank, and people will come up to me and say, hey, I'm interested in buying a house. I'm interested in refinancing my house. I'm interested in getting a loan of some type. They may fill out a form online at the bank saying they're interested in getting a loan. So there's less lead generation that you're going to see maybe at a mortgage company. Now, the top sales people, the top mortgage loan originators at Bank of America and Wells Fargo, they call themselves self-sourced, which means they don't just sit at the bank, but they go out and they talk to real estate agents, and they're out actually marketing their services in order to expand their loan base. The base, however, the client base and loan options are generally limited, right? The leads that you're going to be getting from the bank or the credit union basically are people that are part of that bank and that credit union. And the loans that you can talk to them about are the loans that the bank and the credit union have. You don't have as much flexibility. These kind of people are more likely to be working 9-to-5 schedules. Again, there's base salary plus a commission. Then there are mortgage companies. This is much more of sales. The pay potential is much, much higher. The more loan products, instead of just working with one bank or one credit union or one set of loan products, you have literally sometimes hundreds of different lenders. You're more likely to set your own hours, right? Because at the bank or the credit union, they may tell you, you need to be here at this time. That's your shift. You need to show up. And the mortgage company, it's a commission-only business, no salary, none of that. So how do loan agents generally find clients? Probably the best way, if you're looking for for purchase loans are, and even some refinances, are working with real estate agents. You may have heard the old saying that if you give a person a fish, you fed him a fish. If you teach him to fish, then he can feed himself. But if you can show him how to develop a fish farm, right? Now they have more fish than they can handle with, and they're selling fish. Now, where I'm going with this is that the most successful loan agents generally try to develop relationships with real estate agents. So they do a good job. The real estate agent keeps referring them. They work together. They market together. They do home buying seminars together. The loan agent is helping with the real estate agent's clients. What can they afford? How solid are they? That sort of thing. After real estate agents, loan agents are doing more traditional kinds of marketing, the sphere of influence. You know, who do you know? Who do they know? They may be interested in buying a property, investing in a property, refinancing a property. You can do social media marketing of various kinds, direct mail, people get postcards saying it's time to refinance, and internet lead generation. Right? There are a lot of different ways, and those are there are a lot of different ways of finding. The most successful agents are doing all of these things. They're developing networks with real estate agents. They're working their sphere of influence. They're marketing their services. They're doing it all. So can you be a real estate agent and also be a mortgage loan originator? And the answer is yes, if your broker allows it. And that's also if you're doing it through the broker. Right. So some of you may work at a real estate office that if you ask them, hey, can I do loans? They're going to say no. Right. Sometimes they'll say no. But there's still another way to do loans. You just don't necessarily do it through the real estate office. If the real estate broker allows it, and by the way, if you're having trouble finding one of those brokers, talk to me. I have brokers that allow it. Then you can do loans for your buyer clients. You could also refinance. So this would give you, if you're a real estate agent, something else that you could talk to people about, because they may not be interested in selling their home, they may not be in the market to buy a home, but they might be in the market for a home equity line or a remodeling loan or to refinance their loan. So that's the advantage of being both a real estate agent and a loan agent. You could work with your own clients. The downside might be that it'll be more difficult to get other real estate agents to refer business to you because you have a real estate license, and they may be, well, concerned that you might try to steal the client and do the whole thing, do the whole package, do the loan as well as help them buy the house. So how do you become a mortgage loan originator in the state of California? Now, the rules, although I'm talking about the state of California, are pretty much the same in every state. There's a little bit of differences, but not significant ones. The first thing you would normally do is apply for an NMLS, which is the National Mortgage Lending Service account and ID number. And then there's a required NMLS pre-license education. And then there's an NMLS mortgage licensing exam. And then when you've done that, you can apply to get your license. They're going to do a background check. And then when all of that's done, they'll issue you a license, and then you can associate with a broker. So let's break this down. The NMLS, the National Mortgaging Licensing Service, is a system used to process MLO. MLO stands for Mortgage Loan Originators licensing requests, and they do it for all 50 states, including California. There is no state license. There is no state licensing exam. The exam that people take to become a mortgage loan originator is the same exam everywhere, right? There isn't a special license. However, states sometimes have special options or special requirements. We're going to talk about what California's is. Now, in the PDF, that's a handout. That link should be a hyperlink. If you simply Google searched it, you would go to the NMLS online registration portal. There's two options: setting it up for a company, which is probably not you. So you would select the individual option. There's a security CAPTCHA. You fill out the form, not very complicated, takes a minute or two. When you've done that, they're going to issue you your NMLS ID number. They'll issue it to you. Now that you've got your NMLS ID number, you can complete the California NMLS pre-licensing education. There are two ways for you to be licensed in the state of California to do loans, two different ways. One way is through the California Department of Financial Protection and Innovation. This used to be known up until the beginning of 2021, really, as the Department of Business Oversight, the DBO. And if you're researching this, you may find people referring to the Department of Business Oversight or the DBO. Their information is just a little bit out of date. Now, the thing about this option is you do not need to have a real estate license. Now, could you do this even if you had a real estate license? The answer is yes. Right? So even if you have a real estate license and you don't want to use your real estate license to do loans, you can still do loans. This option does not require a real estate license, only that you complete the pre-license education and pass the exam and do the other things. It also requires an additional 2-hour course. Now, these are home study kinds of courses. You log in, you read, there's videos, there's quizzes, and then you take an online open book. You can take it at home, cheat as much as you want to, final exam, and you're done, right? On this licensing exam itself, there are no California specific questions. The other way of being licensed to do loans is through the California Department of Real Estate. If you have a real estate license, then you could use that, and the only difference is you don't have to take the other 2-hour course. But let's say you work for a company that says, we don't want you to do loans, right? What they usually mean, and I've checked with errors and emissions insurance providers for several large companies. What that usually means is they don't want you negotiating loans using your real estate license. But does that mean you're not allowed to do loans if no real estate license was involved at all in the process? And that's a totally different question, right? So, for example, you don't do appraisals through your real estate license. But does that mean you couldn't become an appraiser? You just go take that exam and you get an appraiser's license, and now you can do appraisals. That probably isn't of importance to your broker. So if you do not have a real estate license, and by the way, even if you do have a real estate license, using this system, using the Department of Financial Protection and Innovation system is the safest, because you could do loans separate from your real estate license. You could give up your real estate license. You don't have to do them through your broker. So what's required? In addition to the 2-hour California course, you have to take a 24-hour NMLS. Now, when you see SAFE, and I'm sorry, it's occurring to me there's a lot of alphabet soup here. SAFE means the Secure and Fair Enforcement, and NMLS, those are the rules that are federal rules in order to become certified, licensed to do loans. It's a 20-hour pre-licensing course, right? Plus 2 hours with the state of California. So all states require this, 20 hours. All states do. It doesn't matter where you're doing loans, you're going to have to do the 20-hour requirements. And the out-of-state, the state required education, some states require another course, some states don't. That's good enough. I have packages to help you prepare for both, right? Both the state course as well as the NMLS licensing exam. Let's say you want to do it through your Department of Real Estate license. You can do that, right? You need your broker to go along with it. The Department of Real Estate would issue you the MLO endorsement. It's still, you have to take the 20-hour course. You still have to take the same exam. You have to do everything the same, except you don't have to take the additional 2-hour course that you would need for the other licensing system. And you have to have a real estate license in California. You have to take the education to get a real estate license. You have to work for a broker or sponsor. You have to be sponsored by a broker from the Department of Real Estate. So now that you've done your 20-hour course, right? Remember, the final exams for these courses are online final exams. You can take them at home. They're open book. You can cheat as much as you want to, right? So you've done that. You've done the 20-hour course. Now that you've done that, you can schedule to take the SAFE, Secure and Fair Enforcement, MLO, Mortgage Loan Originator exam, which is mortgage-related laws, ethics, loan origination activities, general mortgage knowledge. It's 125 questions, of which 115 are scored. So out of the 125, they throw out 10 questions, which they want you to answer, but it's not part of your score. They're trying out new questions, right? They want to see how many people are getting them right, how difficult they are. You get 190 minutes to take this exam, and you need 75% to pass. It costs $110. By the way, the failure rate is over 50%. I'm just saying, right? And everybody that is failing have done the 20-hour course, right? But that's not enough for most people. So I have packages to help you get your MLO or NMLS license. For if you don't have a real estate license, the $499 package includes the state 2-hour components, online materials, online video, online audio. There's a live class webinars. There are Monday, Tuesday, Wednesday, and Thursday, generally from noon to 1. I got a slide coming up on that. You get certificates at the end, a PDF. It also includes a live test preparation webinar. And there's this the serious system, as best I could explain it, this comprehensive system for practice testing, getting ready for the exam. There's interactive flashcards, matching, fill in the blank, practice testing, more practice testing. There's a pre-assessment, a readiness indicator that lets you know when are you ready to go take the test. The software works on all devices, mobile, tablets, it's friendly, they're up to date, and you get a 6-month access to the preparing for the exam part. The 20 hours, by the way, you need to finish that relatively quickly. Basically, you're given 2 weeks to do the 20 hours. You can't stretch that out forever. And by the way, I have found it's better to do the 20 hours quickly, which you kind of have to do, but then take the exam quickly. The longer this is drawn out, the greater the chances are that people fail it. I've just noticed that, right? Think of it like a root canal. Quicker is better, right? Don't drag it out. If you already have a real estate license, the investment is $450. The difference is because you don't need the 2-hour California course, but everything else is the same. The 20-hour materials, all of the live classes, all of that sort of stuff, the practice testing, readiness indicator, all of that is included. And the 20-hour class, there are live sessions, they're all recorded. They're from noon to 1, Monday, Tuesday, Wednesday, and Thursday. Thursday is usually a longer class. They're live, they're recorded, they're given pretty much every week. If you've already taken the 20 hours and the 2 hours and you've done all that, and you don't need it, you're just having trouble passing the exam, I have a examination preparation component only for $250. Includes a live webinar. It includes all of that practice testing and other material. So now that you've passed the exam, right, because you've been well prepared, you can now apply to get your license, right? You can now apply, and you go back to the website where you got your number, and you can now apply to get a license. So these are the fees that are typically involved in becoming a mortgage loan originator. There's a $30 processing fee, a background check, a credit report. The testing is $110. I already covered that. If you're taking the full course, that's $499. The total investment in getting your NMLS license is $690 and some change. And by the way, it can be done in 30 days. This whole thing could easily be done in 30 days. So now you pass the test, you need to get hired, right? And you now have an ID number, but you have to associate your NMLS ID number with a broker that is already approved to do loans, right? And in the state of California or wherever you're working, you need to get hired. We'll talk more about what those options are. So a company that I work with is called Pacific Wholesale Mortgage. It's a cloud-based company like Uber and Airbnb and Amazon and Netflix, like eXp Realty would be. It's a cloud-based brokerage. That means there aren't brick and mortar, which means that they have enough, they can pay better, charge less, pay better, and provide more training and services than what you might get from the traditional ones, the brick and mortar. So what's the difference between the direct lender versus the wholesale broker? I've covered this a little bit already. If you work for the bank, there's one set of guidelines, higher rates and fees. But if you're working for a wholesale broker, it's not brand specific, and the banks actually compete for the best rate. So in other words, if the banks all know, if all the lenders know that we can pick whoever we want to, they're much more likely to quote us better rates and terms than if we were locked in. More loan products, better rates than what you'll get from a direct lender. So there's also a lot of training. I'll show you what the schedule would look like in a bit. Training both on the product, the different kinds of loans that you need to know about, plus training on the tools to use the products, the technology, training on how to get clients, all of that sort of stuff. Also, Pacific Wholesale Mortgage has an option where you can become an equity owner of the company, where you can be paid revenue share based upon helping the company grow. And that's one of the ways in which you can make money. One, of course, the most obvious one is you can be a loan officer, right? And then you help people get loans and you get paid just like I mentioned before, 1.25%. And by the way, that can go up as you're doing more loans. The other way in which you can make money is as a team builder. And so a team builder is somebody who adds other mortgage loan originators to their team. And then you get paid revenue share, which is out of the company dollars that goes to Pacific Wholesale Mortgage. You're going to get a percentage of that in order to reward you for helping them grow and to build the team. More of that, I'll show you how to get more information about that later. So if you're a recruiter team builder, by the way, that doesn't even require that you're doing loans. Now, most of the recruiter team builders are also doing loans, but I'm just saying, even if you don't have an NMLS license, you don't have a real estate license, but you're interested in the team building aspect, and talk to me, because you still have access to profit share on the team's production. If you're an originating loan officer, you got to be licensed. Go through the 20 hours, NMLS, all of that. And then you actually do more. You bring loans to the processor. You get people to fill out the loan app. So the training is, there's about 8 hours, let's say, of initial training. You got to go through it at least once. You can see it's repeated. Some of these things you might want to do on a regular basis. There's a motivational call every Monday. There's marketing training, there's labs or different kinds of loans, more marketing training, there's on fees, onboarding training. It's kind of a comprehensive training program. You definitely would like to go through that one time. If you're interested in finding out more information about the team building aspect and how all that works, click on that hyperlink there to see a presentation of the model and how it all works. That's from the guy who started Pacific Wholesale Mortgage. If any of the links aren't working, send me an email and we'll send you a direct link. What's next? If you want to get started right away, click on that link. Right now it's a Google form because I'm having website issues, but we'll take care of you. You fill out the form, we send you an invoice, you pay, you're in. If you'd like to ask me questions about this, if you've got issues that you'd like to discuss, set up an appointment with me. And if you would like to check out, this is the same link from before, the Thursday 7 to 8 description about how Pacific Wholesale Mortgage works and all that, that's a link that'll take you to that. That's all I've got for today. I'm going to need to run because I'm showing some houses. If you're interested in finding out more information about that, click on the link, set up an appointment with me. Let's talk, right? Let's talk. It would be a good thing to add to your real estate business, even if you're not doing real estate. It would be a good thing it could be a good thing to do. All right. I want to thank all of you for participating today. Set up an appointment with me if you'd like to talk more. Have a great day. Stay safe out there, people.